Do you receive down payments as prepayments for the items that you give to your customer? QuickBooks Online has two different ways to record upfront payments. So even if you're getting job deposits for future services or getting paid in advance for items, I'm going to show you both ways to record them in QuickBooks Online. QuickBooks Online has a special job deposit feature that could show up at the bottom of an invoice if you activate it from the account settings window. But that's not really the best way to record upfront payments all the time. Sometimes down payments or advance payments are best recorded under the traditional method, and I'm going to show you both of them right here, right now. So when making your choice between the traditional method and using the QuickBooks Online deposit feature, please consider the following. Your teacher recommends the traditional method. That's because it can be used with any accounting system, even QuickBooks Desktop. It keeps more accurate and detailed records, and it keeps your QuickBooks customer records updated correctly, which is really the most important thing on a day-to-day basis. And it has more information on the customer reports, so you really see what's going on. Now, regarding the online invoice deposit feature, it's simply more convenient. It uses the feature that's automatically included with QuickBooks Online, and I promise I will demonstrate that feature after I demonstrate the original method. When you use the traditional method, the service is owed to the client in the future for the upfront payment. That means at the moment you get the money, you need to record a negative number in the customer's balance and in the customer's records. Now, physically, you record the traditional method by using the Receive Payments window, the way you did with all previous payments that you recorded from clients in prior videos for prior invoices. And if you need to give them some kind of deposit receipt as proof of the upfront payment, you can just use some template that you have already in Microsoft Word or Excel, fill in the details of the sale, and print it out. So, what happens in the accounts when the customers pay in advance? If we get money from a customer, the bank balance goes up. The customer's balance goes down. And you could temporarily have a negative balance in the customer's account until the job is done. And the payment stays in the customer records as what we call an unapplied credit. And you saw an example of that in earlier videos. Now, let's do an example using the old-fashioned method. So, let's imagine on March 24th, Alan paid us $700 in advance for a future service, and this payment is completely unrelated to any previous open invoice. We will record this in the Receive Payments window, and we will record it directly deposited into the bank account. We will not apply this payment to any open invoice, and that's why it will generate a credit memo. From the top left, we click New, Receive Payment, and we make sure that the date is March 23rd in our little story, March 24th actually. And the customer is Alan. Now look what happens when we choose Alan. We get his open invoices. Now, the payment method was cash, and it goes directly into the bank, and the amount we received was $700. Now notice, QuickBooks assumes we are applying it to an invoice, but we are not yet. because we specifically stated that the existing invoices have nothing to do with this down payment for a future job. So you must click to remove the check mark. And when you're ready to save the window, you should have money in the received field, but none of the invoices selected. Save and close, and it says, we'll save this payment as a credit since you did not select an invoice. Save as credit. And we can check this on the Open Invoice Report. Reports, Custom, Open Invoice. And here's the section of Alan, and you can see here's the payment, and you can see the reason it's on top is the teacher forgot to put the right year. So let's just rectify that now. And then the Open Invoice Report, save as credit. The Open Invoice Report will show it properly in date order. So if you didn't make the mistake, yours would be the last transaction listed. And here it is. And again, it's only on the Open Invoice Report because it has not yet been applied to an invoice. So now let's imagine it's March 25th and we actually did the 15 editing hours for Alan that we received the $700 for. Now we'd like to apply that $700 payment to the invoice that we're about to make. But first, we have to make the invoice. From the top left, we click New Invoice. The date is March 25th of 2025. The customer is Alan. And we have to make sure that we choose Editing 15. Now click Save and click Save and Close. And when we go back to the Open Invoice Report, you can see that the new invoice dated March 25th is right here for $2,100, and we still have the $700 payment that we need to apply. So now the Open Invoice Report shows both because you have not yet applied the payment to the invoice. From the top left, we click New and go down and click Receive Payment. Now we choose Alan Arby, and of course we keep the same date. And notice what QuickBooks Online did. It assumed that the credit that was available should be applied to the oldest. But we have to correct this. We have to uncheck the wrong one and then recheck the correct one. It's not that easy because if you click the box, it assumes you're using the entire amount. You have to overtype with just the amount you're applying to that invoice. So you have to also be careful about what QuickBooks Online put up here. You have to type 0 yourself when you make a $0 payment. So when you finish, before you save this window, the amount received has to be 0 and the amount of the invoice and credit or payment has to be the full amount that you're applying. 2 700s here. And most importantly, before you save the window, double check and make sure the amount received in the amount received field shows 0. Remember, you did not receive money, you're only applying the previous payment to the current invoice. 2 700s here and 0 here, and click Save and Close. And when we come back to the Open Invoice Report, you can see the payment is gone and the invoice we just created has been decreased to $1,400. And by the way, If you want to have the same numbers in your QuickBooks Online account that I'm showing here in the video so that you can follow step by step and match numbers, you can look below this video in the description field below the table of contents and you'll get the link to the full accounts receivable course. That video will show you how you can set up from zero, follow step by step, and match numbers so that you can learn the entire series all the way up to this video. Now, the QuickBooks Online Job Deposit feature is more convenient to use than the other method. It even gives an invoice as a proof of payment receipt for the upfront down payment. However, it makes your records a little bit less accurate between the moment you got paid and the moment you deliver the service. Sometimes when customers pay in advance, they want both a receipt for the deposit they just gave and an invoice for the entire balance of the job right at the start of the job. QuickBooks Online provides the QuickBooks Deposit feature so they can satisfy this condition. And when we use the deposit feature in QuickBooks Online, it must first be activated in the Company Settings window. You see, we click the cog wheel and we click Company Settings, but remember, if you're using the Plus version of QuickBooks Online, it's called Account Settings, but it's in the same place and it does the same thing. Once you open the Settings window, this option is in the Sales category, and all you have to do is click to activate by clicking the word On right next to the word Deposit. And once you do that, it means the next time that you open an invoice, there will be an additional box at the bottom right of the screen just for you to put in the amount of advance payment or job deposit that the customer gave in order to reduce the invoice right at that moment. So let's go ahead and activate it now together. Now, before we activate it, let's take a look at an invoice to make sure that it does not yet have the job deposit box. If we click New, Invoice, and we go to the bottom right, you can see that this is the original box for sales tax that you can learn about in a different course from this one. So let's activate the feature in either the Account Settings or Company Settings window. We can reopen the Settings window by clicking the cog wheel in the top right, going over to where it says either Company Settings or Account Settings, and opening up the Settings window. Now, once you're in the Settings window, click the Sales category, and you can clearly see this section for sales form content. Clicking once anywhere in the section allows you to edit the options, and this is the one that we want. So on the same row as deposit, click to make the option green to indicate that it's active. Now click Save in the section, and don't forget to click Done at the bottom of the window. See right here, Done. Now that you click Save and click Done, you can click New, Invoice, and when you look at the bottom of the invoice, you can see QuickBooks Online has added the deposit feature with a little box for you to put in the customer's payment. So what exactly are the steps for using this job deposit feature in QuickBooks Online? Well, you have to create the invoice for the whole entire job on the day that you receive the deposit or down payment. You record the amount received in the field for deposit. That's what it's for. QuickBooks Online will deduct the amount of the deposit field from the total, and you can give the client the invoice as proof of payment for the deposit. It will show the decrease for the deposit and the remaining balance. Now, they already have the full invoice as a request for payment when the job is done, so that's another added convenience.
So clearly you're going to put the money amount that the customer paid you right there in the bottom right, because that's what it's created for. And it's specifically intended to receive advance payments for the invoice that you're making.
But when you think of what this method actually records when you save the invoice, you'll see that there's a little bit of a contradiction.
Think about what the job deposit box does. You see, job deposits are supposed to be in advance payments before the job starts. However, when you record an invoice, QuickBooks Online will record the entire job's income as already earned. So that's a bit of a contradiction. You got paid before the job started, but you recorded all the income as earned. How could both be true? I got a payment before the job started, and I recorded the advance payment, and now it indicates that I already earned all the income. Why do we do that? We do that because this idea comes from how bookkeeping was done in the days before the computer. In the days before the computer, some companies' clients needed a receipt for the advance deposit for the job, and companies wanted to give a document explaining and requesting the remaining amount unpaid so that it's clear to the client what they're going to have to pay when the job is done. So what happened was the invoice became both. It became the formal request for payment and became a receipt that proves that the customer paid some money in advance. So we can record them together at the same time in QuickBooks Online because some clients expect them to be recorded together and received together. So what happens when we record an invoice and actually use the deposit feature? Well, when you record an invoice, the income increases by the entire amount of the invoice. The invoice amount comes from the total of the items, and the items go into the income accounts. So the income will increase for the total amount, and QuickBooks Online will assume all of that income is earned. What else will happen when we record an invoice and use the job deposit feature? Well, we just got cash from the customer, so obviously cash in bank or either undeposited funds will increase by the amount received. So if you take the income earned and you deduct the amount received, the difference is what's still owed. So the difference will increase accounts receivable for the amount of the invoice that's unpaid. And these are how the numbers will change.
So let's imagine on March 26th, Candy gave us $900 as a partial down payment for 15 video hours to be done in a future date.
So here's a situation where we're using the job deposit feature, and now let's crunch the numbers. I happen to know that 15 video hours would be $4,500 in video income, and that would be the full amount of the invoice. Now we received $900 cash as the in advance job deposit down payment. Therefore, $3,600 is still owed as the balance of the invoice. And these will be the three numbers that change the chart of accounts and the trial balance. So what will happen in this particular case when we record this invoice with the job deposit feature? Well, the income earned will increase by the full amount, $4,500. The cash in bank will go up by the amount we physically received, and the difference, which still remains owed on the invoice, will increase by $3,600. So what will be the result in the trial balance when we record this invoice? Well, we just earned $4,500 more in video income, So for the total balance of the invoice, video income will increase to $51,600. And we just physically deposited $900 more into the bank account, so cash in bank increases by $900 and becomes $29,890. And the difference of $3,600 is still owed on the invoice, so accounts receivable increases by that amount and becomes $25,500. Let's take a look at how to record it. From the top left, we click New, Invoice. The date is March 26th of 2025. The customer is Candy. The product or service is Video Wedding 15. So far, everything is the same, but if we scroll all the way down,
And there it is, the field for job deposit.
we can click in the deposit box and we can type in the amount that Candy physically gave us today, March 26. Notice when we push tab, QuickBooks Online knows that there is still $3,600 remaining owed for this invoice. And then we click Save and Close. We can open the trial balance and see the results are exactly as what we expected. Cash in bank went up to $29,890, accounts receivable went up to $25,500, and video income increased to $51,600. Now, the open invoice report should still show the net amount of the open invoice, which is the total of the invoice minus the deposit the customer gave. We know that amount is $3,600. So we will go to the Reports menu and go down to Open Invoice, scroll out a little for the audience, and when we go down to Candy here, we can see that the invoice we just created has a remaining balance of $3,600. So in continuing with this example, let's imagine that it is now March 28th and we finished the 15 hours of video that was invoiced with the $900 deposit that we received. What exactly do we do when the job is finished and we're using this method? The answer is you do nothing. There's absolutely nothing else to do. That's because the income from the job has already been recorded, and it was recorded the minute we made the full invoice. You might want to reprint and resend the invoice because you might want to remind the client that the job is done and it's time to pay, but there's no additional entry to record because everything has already been recorded. Now remember, there is no method of recording advance payments, prepayments, job deposits, or down payments that does not require an accountant level adjustment between the moment you got paid and the moment you performed the service. But you will only need this adjustment if you prepare formal audited financial statements between the moment you got the money and the moment you did the job. That's very rare. And even if it happens, if you're going to prepare audited financial statements, you're going to need a CPA anyway. So take the recommendation of the certified professional of exactly how to record the adjustment. But just to be completely thorough for the students who are so curious about how to record the adjustment in either method, I'm going to give you a quick summary of each as the close to this video. So to be absolutely clear, we're only talking about the time period between the moment we receive the advanced payment and the moment the final service is given. You only have to make an adjustment if you are required to report formal audited financial statements between those dates. You see, between those dates, accounts receivable could be misleading if you simply took the balances of your customers and put them together as accounts receivable on your balance sheet. That balance should not include any customer's negative balance because it throws off the amount that a person who's looking at the financial statements will understand as how much is owed in total from all clients together. That negative amount should instead be unearned income. That's the right way to classify it when presenting financial statements under generally accepted accounting principles. So, what's the deal? Well, the amount that is unearned between the moment that you make the financial statements and the moment that you give the service should not be represented as a negative number in accounts receivable. Instead, it should be unearned. So what do? Well, you have to remove the negative number from accounts receivable by increasing it by the negative amount. And then you have to increase unearned income by just the amount that was not yet earned between the moment you make the financial statements and the moment you finish giving the service. Now, these adjustments are all done as journal entries, and I promise we will learn about journal entries in the future. However, it's very simple to record a journal entry even if you never studied accounting. You should know that this is what the journal entry would look like. You would make a debit to account receivable and the specific customer's balance for the amount that is unearned, for the amount of service that you did not yet perform between the financial statement date and the date that you finally finished giving the service. That will increase accounts receivable so it is not misleading. And then you would have to make a credit to unearned income because crediting unearned income increases it by the amount that is not yet earned at the moment that you make the financial statements. Now, if you're using the job deposit feature, your accounts receivable would also be misleading at the moment you make formal financial statements if you do not make an adjustment. That's because the invoice that you recorded when you made the deposit is not yet owed to you from the client because the job is not finished at the moment you're reporting your statements. Income would be overstated because it's not yet earned. So if this is the crucial moment, we're talking about the amount that was not yet earned between the moment you make the statement and the moment you give the service. So not only is the income not earned, but the money is not yet owed to you at that moment. So you have to fix both of those things. So what do? Well, you have to decrease income by the amount that's unearned and decrease accounts receivable by the amount that they do not yet owe you, which is the same amount, the amount that is unearned. And of course, your accountant will make a journal entry to do this. What would the journal entry be? Well, you would have to decrease your income account by making a debit because the income that's reported is a little overstated because you have not yet earned the full amount at the moment you're reporting your financial statements. And you would have to decrease accounts receivable and the specific customer's balance by the amount that they do not yet owe you because it is not yet earned. And again, even if you don't know how to make journal entries, just follow this template if you need to adjust for yourself. You will not need to adjust for yourself because if you're making formal financial statements, you're going to be working with a CPA that will know how to make this adjustment.
Thank you so much for watching this video all the way till the end. I'm here in the comment section if you have any questions, just ask, and I hope you will click like and subscribe to help support the free channel for everyone.